You're over 40.
You've got $380,000 in your 401k. Maybe kids heading to college. You keep seeing Bitcoin in the news, and a voice in your head keeps asking, should I buy some?
But another voice says, isn't that for 25-year-olds who can afford to lose money?
Here's the honest answer from someone who's not trying to sell you crypto.
In the next minutes, I'm going to give you something rare, honest, non-hype guidance specifically for investors over 40 who can't afford big losses.
This is not financial advice. I am not your advisor, but it is a framework to help you make an informed decision. No hype, no fear-mongering, just data, context, and a practical decision tree. Let's start with why this question is harder for you than for a 25-year-old.
Here is the hard truth. Bitcoin might make perfect sense for a 25-year-old with 5,000 invested and 40 years to recover from mistakes. But you're different. You've spent 20 plus years building that 401k. You're in your peak earning years. These next 10 to 15 years determine your retirement lifestyle.
A 50% Bitcoin crash isn't just part of the game for you. It could mean working 3 extra years.
So the question isn't, is Bitcoin good? It's, is Bitcoin appropriate for my situation? Let's figure that out. Let's cut through the noise.
Bitcoin has delivered extraordinary returns, 10,000% plus since 2013.
It has gained institutional legitimacy. BlackRock and Fidelity now offer Bitcoin ETFs. Major companies hold it on their balance sheets.
But it's also dropped 70-80 multiple times. It's still speculative. No one, and I mean no one, knows if it will be 500,000 or 20,000 in 5 years. Anyone who tells you they know is lying. So how do you make a decision with this uncertainty? That's what the next section is about.
Here's the most important test, the sleep test. If you decide Bitcoin fits your risk profile, here's the allocation framework.
For a 500,000 portfolio, which is realistic for someone in their late 40s, I'm going to give you 3 options, ranked by conservatism. Ultra conservative, 1-2, or
great, you made 50,000, 100,000.
Moderate conservative, 3-5, or 15,000 minus 25,000.
This is meaningful but manageable. Aggressive for your age bracket, 7-10, or 35,000 minus 50,000. This is a real bet, with real consequences both ways. Anything above 10%.
That's too risky for someone who can't afford to rebuild. Here's my personal rule. If your spouse or partner couldn't understand this investment if something happened to you, it's too complex or too large.
So why this year specifically? What's different now?
The good news. Bitcoin is more accessible and legitimate than ever. Spot ETFs mean you can buy it in your brokerage account like a stock. No wallets, no exchanges, no complexity.
Okay, here's the decision tree.
Walk through this honestly.
First, do you have high interest debt?
Credit cards over 20%? Pay that off first, guaranteed 20% return. Second, do you have 6 months expenses in emergency savings?
No, build that. You can't afford speculative investments without a safety net.
Third, are you maxing out your 401k match and II? Those are guaranteed returns and tax benefits. Bitcoin can't compete with that.
Fourth, will a 50% Bitcoin drop cause you to panic, sell, or disrupt your life? If yes, stop or go smaller.
Fifth, do you need this money in less than 10 years? Bitcoin is too volatile for short timelines.
Sixth, have you actually researched Bitcoin, not just watched hype videos, but read the skeptics and the believers? If you've passed all 6, then a small allocation 1-5 might make sense. If you decide to buy, here's how, and this matters.
For investors over 40, I strongly recommend Bitcoin ETFs. You can buy them in your normal Fidelity, Schwab, or Vanguard account, just like buying a stock.
No wallets, no complex exchanges, no security nightmares.
You can even hold them in a Roth II, meaning tax-free gains if Bitcoin does well. Yes, there's a small fee, about 0.2% per year, but the simplicity and security are worth it. Option 2. Established exchanges like Coinbase.
More complex, but fine if you want direct ownership.
Option 3. Self-custody wallets.
I do not recommend this for most people over 40.
Too many horror stories of lost passwords, meaning lost fortunes. Keep it simple.
Let's game out 3 realistic scenarios over 10 years with a $20,000 position.
250,000 minus 500,000.
Your $20,000 becomes 60,000 minus 120,000.
That's a nice retirement boost.
The key, in the worst case, you survive. In the best case, you benefit.
That's appropriate risk for your age.
So, should you buy Bitcoin in 2025? Here is my honest answer. Not if you are hoping it will save a struggling retirement. That is gambling.
Not with money you need in the next 5 to 10 years. Not if a 50% drop would cause panic.
But maybe as a small 1-5 position in an otherwise conservative portfolio if you've done your homework, have your financial house in order, and can emotionally handle the volatility.
Bitcoin might be a revolutionary technology and store of value.
Or it might not. You're making a calculated, small bet.
The best position is one that lets you sleep at night and participate if you're right. That's probably somewhere between 1-5 for most people your age. Here's what to do next.
First, download the over 40 Bitcoin decision checklist I've linked below. It walks you through every question we covered.
Second, calculate your appropriate percentage based on your portfolio size and risk tolerance. Third, make a decision within 7 days, not in 10 minutes out of FOMO, and not in 10 months out of paralysis.
7 days, discuss it with your spouse or financial advisor. Fourth, if you decide yes, start with half your target allocation, test the waters, see how you feel.
And finally, comment below. What percentage are you considering?
0%, 1%, 5%.
Or are you passing entirely? I'll respond to every comment, especially if you share your reasoning.
This is one of the most important financial questions of this century.
Make sure your answer is thoughtful, not emotional. I'll personally respond to everyone who shares your age, your allocation decision 010, and your biggest concern.
Let's build a community of thoughtful investors, not gamblers. Thanks for your time and join the community by subscribing, liking and commenting. Do not forget to keep calm and your emotions away, or at least under control when it comes to investing your money.